Hey everyone, welcome back. This is another weekly portfolio update video. As always, use this video as a springboard in your investments. I am not the greatest investor in the world, but I've been doing pretty okay. So if you want to follow what I'm doing, or if you have criticism of anything that I'm doing, let me know down below. Now let's get started with this week. So this week, as you can see here, I made about $900 profit total of all my accounts. In Robinhood, I made about 250-ish dollars. Didn't really quite make a lot of money in my Vanguard account. It stayed pretty flat. The other accounts, 401k and ESPP, I did make about 300 or so in both, which is pretty good. Now, if you didn't see my last video, which is about the current state of the market, I'll put a little card up here. Basically, so I am a person that invests heavily in tech. My most favorite companies being Apple, Amazon, Sea Limited, and Microsoft. And my worry right now is that tech isn't going to be going up as much as it has been going up for the past 6 or so months. Not so much the last 3 months, because if you've been following my videos, you can kind of see me breaking down or looking at the charts and seeing that tech in general has been pretty flat for 4 months now. And my worry is that investors are going to go into, they're taking their money out of tech, and they're going into areas such as banks and airlines, as well as ETFs that deal with a booming economy outside of the home. So tech in general does really well, or was doing really well, because people are staying at home. So, for example, people are using their Apple products and their Apple services, and they are using Amazon to get stuff delivered. And in the case of Sea Limited, which is like a Comcast-esque company for the Asian markets, as well as having a game division, these companies strive on people staying at home and using electronic devices. Now, if we move to a stage in the pandemic where people are not afraid of the pandemic, or the vaccine is effective and a lot of people take it, or people are just satisfied with the vaccine, etc., then people are going to stop investing or take money out of tech, because they can see a huge potential in other markets that right now are actually pretty darn low. So I'll put a little overlay, but essentially there's a lot of companies that in the year ago had 100% plus valuation of what it is currently now. So in other words, right now it's 50% off of what it used to be about a year ago. And as an investor, that's what you want to do, right? You want to find an opportunity where you have a company that is undervalued, but there is potential in the valuation increasing. And that's what we're seeing right now with airlines and with banks. When people start spending more money on things that are not electronics, and we move past a point where people are losing their jobs, the unemployment rate is not going up, then banks are going to do well. Then airlines are going to do well because people are going to be traveling. Restaurants are going to do well because people are going to go out and eat. And even companies like AMC that have been doing terribly because you can't really go and see a movie because of social distancing, they will hopefully not be bankrupt and have a surge in people going in and watching movies. There's a lot of pent up energy in people that just want to do fun things, right? People have been stuck at home, so we're going to see a huge upsurge of spending in fun categories like traveling and dining and movie theaters. So now with my portfolio, I want to try to get in before it gets too late, and first of all, get out of tech before we have any huge decrease in value, because again, I have primarily tech investments. So I have been transitioning some of my assets away from tech and into some good ETFs that I've been seeing that have had good performance. I'm also getting into crypto. I've been buying slowly into BTC. Now, I'm not a huge fan of crypto, but it has potential right now in the short term to go up a little more than what it is currently. So I've been kind of dabbling with it and I've had some success. I think I made about $100 and started again to reinvest after I sold what I had and took the profit essentially, right? And have been looking further into crypto and the like. Starting sometime this quarter, I forgot when, I started investing small amounts of my money into different companies, right? So Robinhood has this feature where you can set recurring investments, which is kind of like a recurring deposit of sorts into a particular companies, and then you can set the interval either weekly, bi-weekly, daily, and I think monthly. Using this, you can have Robinhood itself just buy things for you so you don't have to worry about it. You don't even have to open the app. Using this technique, I let Robinhood just buy things at an interval for me, and then when I see a favorable return, like for example, like let's say I set Apple recurrent buying at a daily interval, and me buying $150 worth of Apple. So it's fractional shares, right? Because it's not likely that Apple will always be $150 per share. And then I let Robinhood do its thing for a couple weeks. And when I see that I have, like, let's say $100 return on Apple, I sell and then I let it restart again. It's been working decently well for me. Now, this quarter itself has been pretty crazy, right, with the election and all that stuff. So it's kind of hard to gauge, but I haven't lost money. My Robinhood account has been pretty steady. There hasn't been a huge loss for me. As you can see here with my Robinhood column, the biggest loss I see is this week here, and it was about $150. So it's not that bad. I've been liking this form of investing because it's very passive and there's no way you can predict the ups and downs, right? So this form of investing is pretty random. You're buying at a set amount for a particular stock on a daily or weekly basis. It's pretty random. And that's what I believe the market is. I don't buy into the whole tech analysis and even fundamental analysis and all that stuff. I do like the school of thought that everything is random and then you can't really predict anything. You might be able to gauge a little bit here and there using some analysis, but people that think that they're going to be millionaires because they follow a particular pattern in the charts or whatever, I think that's foolish. You might get lucky here and there, but it's all random, right? Luck is random. Anyways, this is a little bit longer than I thought I would go, but I will wrap it up with this little pie chart here that I created. As you can see here, my Robinhood and my Vanguard are almost 50%. Maybe it is 50%. I can't really tell with the pie chart, the way it's shaped. But my goal is to have most of my allocations being in accounts that I have full control over. So with the 401k, I don't have a lot of control over it because there's a company that my employers use that essentially does everything for us, right? They pick allocations or they pick certain funds that they think will go up according to our preferences, and then they do their thing. And even then, with the 401k, if I opt out of this broker guided format, the funds that they have available are pretty limited and they're only funds, right? I cannot individually invest into Amazon, for example, and I don't really like doing a lot of that. I do like funds and I do like ETFs, but I don't like primarily investing in those. So if you don't know, funds and ETFs are relatively safe in relation to individual assets, right? So a fund might be, for example, a tech fund. They diversify within that fund, so they might invest in you buy $100 worth of that fund. That $100 will be divided into different companies, like let's say Amazon and Apple and Microsoft, right? So that $100 will not be going towards 100% of that will not be going towards Apple or Amazon or Microsoft, meaning it's safer because it's diversified, but it's also less likely that you're going to be making a lot of money because as the individual companies go up, you're diversified, so you're not going to be exactly making one for one returns as the company goes up. And right now, I don't like that since I am relatively young. I want to take risks right now that I am able to. I don't have a lot of debt. The only debt I do have is student loans, and that's very easy to take out and very low interest as well. So, right now, while I'm young, I like taking these risks with individual companies, and it's been working out for me. So, as you can see here, weekly average is $300. So, what that means is that on average, I make $300 of returns, and my goal was 134, which would equate to about $7,000, a little less than $7,000 of returns this year. And I didn't record everything. I started recording in the halfway through the year. And as you can see here, even with that being said, and only counting what I've recorded, I've already had close to $7,000 worth of returns in 6 months, which is basically double what I set out to do because I know we had a big hit with the coronavirus, but I have been keeping track of my individual accounts, and I'll kind of I might make a video at the end of the year exactly how much I made in each account because it'll be interesting to see the returns that way. But definitely for sure, I know off the top of my head that in my Vanguard account I made about $3,000, in my Robinhood about $3,000. That's already $6,000 this year. In other words, I know I beat my $7,000 or $134 weekly return target. And my aggressive investment style has been working out so far. Not saying it's the right thing to do, but I am saying I have a lot of time to correct anything that does go wrong. And really, when you're young, you should be going for growth and not consistency or safety. But that's where I'll wrap it up, guys. Make sure you leave a like and subscribe if you like it. I've also been thinking about other video ideas, so look out for that. I might do a video about my favorite cashback credit card as well as my current yearly dividend returns with my allocations that I have right now. So look out for those when they come out. I hope you guys had a good Thanksgiving and a good week in the market. And that's where I'll leave it. See you guys.